Welcome back, investors. Ticker Time News. I'm Adam. And Monday.com, ticker symbol MNDY, a software as a developer providing collaborative work management tools, got pummeled despite reporting impressive Q4 results that absolutely crushed analyst expectations. The recent IPO from last June is generating high double-digit revenue growth, fueled by powerful trends like work from home and workplace automation, and a very effective land and expand strategy. It's this intriguing growth profile that ignited so much excitement from this deal last summer, which priced well above expectations, $155 a share versus the $125 to $140 projected range. Then it opened for trading at $173 a share. That enthusiasm only grew stronger over the following months. Now, before I dive into the enthusiasm over Monday.com, could you enthusiastically smash that like button, share this video, and click that join button right under the video description to get our top 10 stocks list. And if it's your first time watching, click subscribe. Thank you, my friends, for doing that. The enthusiasm grew stronger as Monday.com released its first two earnings reports as a publicly traded company. Like this one, the company rocked top and bottom line estimates and issued upside revenue guidance for the quarter ahead, providing the catalyst to launch shares to record highs of $450 on November the 9th. Since then, though, it's been a much different story. Growth stocks, particularly those with high valuations like Monday.com, have come under fire, and as interest rates march higher, they keep marching lower. Just prior to Monday.com's Q3 report on November the 9th, shares were trading at about 50 times forward sales, following the stock's 70% collapse from all-time highs and down about 52.5% year to date. Its valuation has become more timid, with a mid-teens forward PS. When diving into Monday.com's key metrics for Q4, my initial takeaway was that the sell-off seems to be overdone, much like PayPal. Here's a few key reasons why. First, the number of customers with $50,000 in annual recurring revenue, or ARR, and I love recurring revenue, surged by 200% year over year to 793, reflecting Monday.com's success in winning larger deals with enterprises. In fact, the enterprise tier represents Monday.com's fastest growing segment. Next, in the wake of the pandemic, improving workforce productivity, enhancing digital automation capabilities, and adding tools to support changing workplace dynamics, they have all been priorities for many IT departments. And to capitalize on that, Monday.com launched new features last quarter that cater to the enterprise customer, including new administrative features like content directory and security solutions like an audit log, encryption key enhancements, and many other functions. This focus on building out its enterprise customer base is filtering through to the company's margins due to sales and marketing efficiencies. As a percentage of revenue, sales and marketing expenses were 73% in Q4, compared with 107% in the same quarter last year. Relatedly, adjusted operating margin was at a loss of 10% compared to a loss of 47% in Q4 2020. Now, in Q4, the net dollar retention rate for customers with 10 or more users was over 135%. This impressive metric is a testament to the strength of Monday.com's land and expand strategy as existing customers increase usage across many different departments and use cases. Clearly, there's plenty of momentum behind Monday.com's business. So the question is, why is the stock getting hammered? And to answer this question, we have to turn back to Monday.com's guidance, specifically its non-GAAP operating loss guidance. After posting a major improvement in profitability in Q4, the company expects non-GAAP operating income to worsen significantly in Q1 to a loss of $47 to $45 million. Likewise, in fiscal year 22, non-GAAP operating loss is projected to widen to a loss of $147 to $142 million versus a loss of just $52.6 million in fiscal year 21. Now, during the conference call, Monday.com's CFO said the company plans to have an ambitious hiring plan moving forward, adding that growth will be the main priority. Considering that Monday.com is in the early stages of its growth curve, this strategy is quite reasonable in my opinion. The problem, though, is that this current stock market environment, the prospects of worsening margins and profitability will lead to punishing losses. So that's my take on what's happening with Monday.com right now. How do you feel about the company's growth strategy going forward? Let me know in the comments below, as your comments make these videos so much better. Smash that like button, share this video, and click that join button right under the video description to get our top 10 stocks list. And if it's your first time watching, click subscribe. Thank you so very much for watching, and I'll see you in the next video.